welcome back to RoxomTV. I'm your host, Jemmy. Today's show is completely packed and everything we're covering is connected. We will start with a major Bitcoin story that looks bearish on the surface, but actually tells you how miners are adapting to reality. A public Bitcoin miner just sold $305 million worth of BTC, not panic selling, but a strategic pivot into AI and high performance computing. So we'll break down why mining margins are collapsing, why leveraged Bitcoin treasury strategies are under pressure, and what this means for short-term Bitcoin price action. Then we zoom out to the bigger picture. Mr. Beast has just bought a fintech company, signaling how creators are turning attention into financial power. At the same time, the EU has ordered Meta to open WhatsApp's AI ecosystem, marking a major shift in how AI will be regulated and distributed. We also cover Gemini cutting staff and exiting the UK, Europe, and Australia, and why regulatory uncertainty is pushing crypto companies out of the entire regions. And later in the show, we'll be joined by Edwin Mata, CEO and co-founder of Brickken, to talk about RWA. So what's real, what's hype, and why tokenization is quietly becoming financial infrastructure. So anyways, there's so much to cover today, so let's not waste any time. So let's dive straight into the first news of today. And this is a big Bitcoin story, but not for the reason most people think of. So a public Bitcoin miner just sold $300 million worth of BTC. And no, this is actually not a liquidation. Yeah, I know Bitcoin dropped a lot and crashed a lot in price, but this is actually not a liquidation, but it's a strategic pivot. So let's break it down clearly and step by step. So yesterday on 9th of February, Bitcoin miner, so the name is Cango. So Cango announced it completed a major Bitcoin sale. The company sold 4,400 Bitcoin over the weekend. That sale brought in around $305 million, and it was settled in USDT, not cash. That timing does matter because Bitcoin has just dropped below 70K, and after breathing falling towards 60K, that sale was approved by Cango's board after reviewing market volatility and mining conditions. So everyone is asking why Cango did what they just do. Cango said the sale had three clear visions. So the first one is to pay down a Bitcoin-backed loan and reduce financial leverage. The second reason is to strengthen the balance sheet and improve near-term liquidity. And the third reason is to fund a major pivot into AI and high-performance computing. This was not an exit from crypto or Bitcoin specifically. This was a reallocation of capital. So Cango said it wants to repurpose this global mining site into distributed AI compute infrastructure. These sites already have power, they have cooling, and they have grid access. The plan is to deploy containerized GPU units and offer on-demand AI inference to small and mid-sized business. So to support this, Cango just hired a new CTO who is actually a former Zoom engineer to build software that can coordinate AI workflows across many locations. So think of this as turning mining farms into smaller AI like mini data centers. But just to address the concern out there, even after selling that amount of BTC, if we scroll down to Cango balance sheet, so Bitcoin holdings, Cango actually still holds about 3,600 BTC on the balance sheet. So based on today's price, that's worth roughly $251 million. So here's the key detail. Cango's total market cap is actually not huge, so it's around $330 million. So this sale was almost the size of the entire company's valuation. That actually tells you how serious this pivot is. And the pivot makes a lot of sense financially too. Bitcoin mining profitability is near historic lows. So hash price, so that's revenue per unit of mining power, recently hit record lows. Average production cost is now higher than Bitcoin's spot price for many miners. That means negative margins unless you have very cheap power and latest machines. After the 2024 halving, rewards, of course, were cut in half, competition stayed high, energy costs stayed elevated. So many miners, what they are doing in 2026 is actually they're shutting down rigs. Others are looking for creative ways for new revenue streams. So Kango, of course, is not alone. Across the entire mining industry, Bitcoin miners are pivoting into AI and HPC. This is because AI data centers trade at much higher valuations and AI demand is a lot more constant, definitely not tied to Bitcoin price cycles. We have seen miners do this before, so turn power and real estate into higher margin compute business. So in today's business, pivoting to AI makes a lot more sense than becoming a leveraged Bitcoin treasury company. The reason why I mentioned this because we know Bitcoin treasury companies have been underwater. So does this mean there will be more selling for Bitcoins, like Bitcoin's price going to dump more? Well, short answer, very likely. But as for Bitcoin miners, they're going to dump more. I would say very selectively. So large Bitcoin sales like this can add short-term sell pressure, but Bitcoin is liquid enough to absorb these moves. More importantly, this is not a panic selling. This is a pivot, like strategic pivot to AI. This is just miners adapting to reality. So selling Bitcoin to survive and those reposition is very different from being forced to liquidate. I'm sure that would let us to think more about DAT, so digital asset treasury companies, like how are these companies doing in a bear market? Right now, Bitcoin is down 50% from its all-time high back in October 2025. And in this environment, DAT companies are, of course, under serious pressure. Their stocks are trading close to or even below the value of their Bitcoin holdings. So the so-called convenience premium, of course, has collapsed. That tells you something important. Markets are no longer paying extra for those leveraged Bitcoin exposure. So that is quite dangerous. DAT companies actually amplify Bitcoin moves, so both up and down. If Bitcoin keeps falling, leverage becomes a problem. Capital markets can close, that becomes expensive, and forced selling becomes a real risk. We have seen this movie before. So in the past bear market, leveraged crypto balance sheets were the first to break. Now, let's compare to what miners like Kango is doing right now. Instead of doubling down on Bitcoin exposure, they are diversifying their revenue. So AI data centers actually bring in long-term contracts, very predictable cash flow, and higher valuation multiples. And more importantly, they use asset miners they use the assets that miners already have. So that's why investors are rewarding AI pivots more than treasury strategies right now. So, of course, we'll be watching this sector very closely. And looks like the case, this is a real trend. Bitcoin miners are getting into AI. So speaking of Bitcoin, let's do a quick Bitcoin chart analysis. So, of course, starting with the daily, we fell off the cliff and right now we're trading at $68,000. It was a very scary time over the weekend because we dropped from 70, so somewhere around 70 something, 77K towards 60K, touching like almost trying to crashed below 60K and touching 59K. So that was a very, very scary time. And especially if we look at how quickly it escalated, like how quickly we dropped from 89K to, if we take the bottom, so around 60K. So it's just a matter of 7 days, and we lost more than 30% in a matter of seven days. So I don't know what people are on about, like institutions are here, TradFi people are here, so we don't see that massive volatility anymore. If we measure from the top, so 126K, so that was, I can't believe that was 123 days ago already, which means maybe we're closer to the cycle bottom than we expected. So we already down 53%. That is, of course, the definition of bear market, but people like to twist it. People like to call it a super cycle for some reason. But anyways, I'm not here to argue. I have talked about this like bear flag, and I've talked about positioning out in early October, even in September. So if you guys want to go back to the live streams I've done, or that I did every single day throughout September, talk about the 4-year cycle, but people call me crazy. And some of the viewers were really upset with me because like last week, I took a holiday because I openly talk about shorting the market or taking profit for some of the altcoins position. They got really upset with me, okay? Like, how dare you go on a holiday while your viewers were suffering and hoping for a super cycle? And I mean, I've talked about the 4-year cycle. I've talked about positioning out for months. So yeah, I mean, I don't really see the point why putting the blame on me, because I've only talked about that for 100 times throughout the whole September, through the whole month. So I've talked about that month over month, and even during October, people still call it it's a minor correction. It's still a super cycle after all. But anyways, the top happened exactly on 6th of October. So according to the 4-year cycle, and this is the magical number I've seen. I've spotted over and over again. So 1,064 days. Okay, so of course, the 4-year cycle is not perfect. There are limitations to the 4-year cycle because Bitcoin hasn't been around long enough, and there are only 3 data points we could fall back to. But this 1,064 days, it just happened over and over again. So if you measure from the cycle bottom to the cycle top, like every single cycle, the length is 1,064 days. So that's why back in September 2025, I was warning my viewers consistently. Every single live stream, I talk about that, yet people still upset with me. I talk about 6th of October, 6th of October 2025, there might be a chance, a probability that we're seeing a top. Like, point being, since we are doing these live stream for months, so like most of the viewers should be in profit. So that's what I talk about. Okay, so right now, since we are down significantly, we're down more than 50% from its all-time high. Another question people like to ask is how low we would go. Of course, going back to the daily candles of Bitcoin, we drop. Okay, this is a bear flag pattern that I spotted weeks ago. That was start to form back in November 2025. So how you measure this is, okay, if we take the top and if we take to the breakout point, and if we go to when it broke out, so roughly it's around $57,000. That is just a rough number. Again, like 57K, my trading strategy right now, well, not so much trading because I'm slowly DCing into Bitcoin. And that's more for a long-term investment perspective. Trading-wise, I think altcoins, I like to trade volatility a lot more because altcoins are very volatile. But for Bitcoin, I'm slowly DCing in. Like if you catch my show last week, I talk about, okay, 77K, it was a good exit. So I set up some buy orders. The reason why 77K, because it was the previous support area. So that was back in April 2025. So it was in in March 2025, and also in February 2025. So we had the first buy order trigger. And then the second one, I got it down to 63K. So that was like the mid range for months. So that was a mid range of 2024. And right now, like 57K looks like a good DCA level. I'm slowly aping into market a little bit more, but like since we are using a DCA mentality, this is for a long-term hodling back. So yeah, this is just what I'm personally doing, not financial advice, of course, but like looking at Bitcoin's where it is right now, like 68K. It's not bad, it's fair value. But like according to the bear flag, maybe we're gonna get down to 57K. And when we actually get down to 57K, we'll take it from there. Like we'll see whether it is a cycle bottom, because TA at the end of the day, it feels more like calculating probability. It feels like playing poker. I'm not sure if you guys play poker. So when you have new cards, your probability change. So this is exactly how TA works as well. So 57K, we'll take it from there. Like usually, like how reading the charts it would work, because like that is a massive crash down to 60K. And like when we drop this fast and this rapid and this much, usually we would consolidate a little bit before just going like crashing completely to the cycle bottom, because right now maybe 57K is the cycle bottom, but we don't know for sure yet. We'll take it from there. So this is a level I'm watching. And if we also hop onto the weekly candles right now, because like this crash, it came faster than I expected. First of all, we dropped below the 50 week moving average. Okay, that was like months ago. Talk about that. If we have 2 weekly candles below the 50-week moving average, that is the definition of a bear market. Actually, maybe use this chart instead, because it might be easier to read. All right, so there you go. Let's focus on the 50-week moving average, and then yeah, the blue line. And then one thing I find it very concerning and actually very surprising, like we tried to go to 200-week moving average. So 200-week right now is sitting at $59,000. Like even the last weekly candle we closed about, we didn't even touch it. So not wicking below, not touching it. So let's see how it goes. Usually how it plays out in a bear market is that when we lose the 50-week, we are heading to the 200-week moving average. Though it takes time. Like it's going to take like months or weeks to play out. According to 4-year cycle, the cycle bottom would happen somewhere around like 5th of October 2026. But maybe this cycle will completely break this pattern, but we'll see. So far, it's playing rather well. And if we use this rule of thumb, because Bitcoin, once it loses the 50-week, it would go to 200-week. And if we go to the previous cycle, so back in 2022 bear market, we actually went way below. So we dropped below the yellow line. Here, that was back in June 2022, and then we dropped to the cycle bottom. Like the cycle bottom happened in November 2022. So that was a further correction of 34% before finding the cycle bottom. So this is something that happened in the previous cycle. And of course, like this drop, it came so much sooner than expected. And this cycle is weird because not only Bitcoin dropped, like, okay, over the weekend, gold dropped, silver dropped, stock market dropped, but like DXY, so US dollars went up. So this is an interesting dynamic. Even myself, I find it very, very bizarre as well. But let's take it from there. So let's go back. Okay, so 57K, as I mentioned, that is the level that I'm eyeing. It looks like a good entry price for a DCA perspective. So I'm talking about long-term perspective, not so much trading with Bitcoin, but like altcoins, I do see the volatility become very juicy. Anyway, so that was a quick Bitcoin TA charts update. Like as I mentioned, I'm doing these DAs every single day. So I only spent like roughly 10 minutes today, but like if you want deeper analysis, I highly recommend you going back to my previous live streams where I break down more in details. So we'll take a short break for now and coming back to you. We are also going to look into the news of Mr. Beast because he just bought a fintech company called Step. So it's actually a lot bigger than it looks. So let's take a short break for now and then we'll dive right in.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back to RoxomTV and thanks for sticking around with us. We're now looking at the news of Mr. Beast because he just bought a fintech company and it tells us a lot about where creators, where money and finance are heading next. So let's break it down simply and step by step. So what just happened is that on 9th of February, Mr. Beast announced his company Beast Industries has acquired a fintech app called Step. And the price, of course, it was not disclosed, but the message was very clear. Mr. Beast says he wants to give millions of young people the financial foundation he never had when he was growing up. So this is Beast Industries' first major move into financial services. Step is a fintech app built for teenagers and young adults. It's not a traditional bank. It's a mobile app that helps young users to track money, to save, and learn basic financial skills. It offers no-fee banking, a secure Visa card, saving tools, basic investing options, and also like small borrowing features. So Step is backed by a real bank, but it's designed to feel simple and user-friendly, very catered to younger audience. And it is not small neither. So Step has over 7 million users and more than $500 million raised from investors. So this is a serious platform, not so much as a side project. So why Mr. Beast is doing this, like as I mentioned, Mr. Beast has said it many times. He grew up without any financial education, without any financial background. So now he has one of the biggest audience on earth. He's thinking like, okay, if you already reach young people at scale, why not give them tools that would actually help them in the long term? So this also fits with the whole next move, like a new YouTube channel focused on personal finance and investing. So content and fintech right now is merging together. And what Beast Industries say, so Beast Industries CEO said this still is about financial wellness and meeting young users where they really are. Step will continue operate as its own app, but with more reach, of course, because of Mr. Beast and Mr. Beast's distribution power behind it. That's the key advantage here. But there's something I feel like many people misunderstood. Mr. Beast is actually himself, he's not sitting on massive piles of cash. Like, of course, his videos like to give out $1 million to a random individual. Like, he actually reinvested almost everything. His company is valued at around $5 billion. He is a paper billionaire, but he openly says he keeps less than $1 million personally. So, in other words, he is borrowing to grow, he spends to scale, and he accepts that many ideas fail. So, his model, I would say, it's very much similar to a VC or an angel investor. So one that would definitely fail, would go to zero. The other third maybe break even, and then one that would win. So let's be clear, not everything he touches work. Like there are big wins. For example, like Feastables, they're very profitable, and his YouTube channel that is where he made his first bucket of money, and data tools like few stats that was a big win business for Mr. Beast himself. But there are failures as well. For example, like Mr. Beast Burger, right now they are encountering legal and quality issues, and also like his media, because even for his YouTube channel, there's like high revenue, a huge cost, high revenue but huge cost. So this is not a safe operator. This is definitely high risk, high iteration builder. So right now, I want to touch upon the controversy that he has over all these years, because we have to address the elephant in the room. Mr. Beast has faced serious accusations in crypto, like on-chain analysts have linked wallets to a large pump and dump activity in small crypto tokens. Claims suggest millions in profit while retail investors lost money. Mr. Beast himself denies any direct involvement and says his crypto exposure was managed by third parties. So no legal action has followed, but the reputation of Mr. Beast is damaged, especially in the crypto circles. That makes this fintech move even more interesting. So this is not just about STEP. This is about creators becoming financial institutions. Mr. Beast doesn't need ads. He doesn't need branches. What he needs is trust and attention. And attention is the most valuable asset in today's world, and even in finance. If this works, we'll see more creators launching banking apps, launching payment tools and investment platforms. So this is finance going creator native. Let's move on to the next story of today. So EU. This is a major moment for big tech and AI and regulation in Europe. The EU has openly told Meta to stop blocking rival AI chatbots from operating on WhatsApp. So what this means is that the Meta can no longer keep WhatsApp's AI ecosystem to itself, at least for now. So let's break it down. European regulators issue an interim order against Meta. They say Meta must stop blocking third-party AI systems from working on WhatsApp. This order comes before the full investigation is finished, which is actually quite rare. It signals that Brussels thinks this risk is very serious and needs immediate action. So what Meta did to trigger this, why are we talking about this news, right? So I'm glad you asked. Actually, back in January, Meta quietly changed its business terms. That change made Meta's own AI system that only AI allowed to operate inside WhatsApp's business interface. So rival AI chatbots were effectively shut out. No access, no competition within the WhatsApp app. So regulators seems to think this is a problem. The EU Commission say this move could cause serious irreparable harm. Here's why: like, of course, like WhatsApp is used every day by hundreds of millions of people in Europe. That makes it a critical gateway for any AI service trying to reach users. If Meta controls who gets access, it can lock out smaller AI developers before they even get a chance to compete. So the order right now is temporary but binding. Meta must keep access open under the old rules while investigation continues. That means rival AI chatbots must be followed back in for now. The EU says it's acting fast to stop dominant tech firms from shaping AI markets and value while they still forming. So Meta responds, of course, Meta is not going to like this, strongly disagree. The company said there's no reason for EU to intervene. Meta argues that developers can still distribute AI tools through app stores, operating systems, and other platforms. Of course, other platforms that not included WhatsApp. So in Meta's view, WhatsApp is not an essential gateway. Regulators seem to disagree. So European officials point to history. They say big tech firms have repeatedly used control over platforms to sideline rivals. They cite past cases involving Apple, Google, and Meta itself. From EU's perspective, this is a familiar pattern, just now applied to AI. So this is not just one app. Europe's tech crackdown is expanding. It started with content moderation or privacy or data control. And right now they're getting into AI, whether it's AI infrastructure, whether it's AI distribution, or who gets access to users. By regulating access to platforms like WhatsApp, the EU is shaping how AI reaches people. So if the EU holds its ground, Meta may face to redesign how AI works inside its messaging apps. This could set a precedent. Other tech companies racing to build their own AI assistant may face similar rules. So this is Europe drawing a line early in the AI race. So of course, we'll be watching how this development goes very closely here on RoxomTV. So we'll take a short break for now, and when we come back, we're also going to get into the news of Gemini cutting its staff. Yet again, is this concerning or is just business as usual? So do stick with us, and there will be more juicy news to come.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to RoxomTV, and thanks for sticking around with us. We're now diving into the news of Gemini, and this is a big move in the crypto industry, and it tells us a lot about where crypto companies are heading next. So Gemini, of course, the crypto exchange founded by the Winklevoss twins, they are now cutting jobs and pulling out of multiple major regions. So let's break it down, plain and simple. What just happened is that Gemini confirmed it will lay off 25% of its workforce. That's up to 200 jobs across US, the UK, and Singapore. At the same time, Gemini announced it would exit the UK, EU, and Australia. This is not a rumor, and this is very official. So let's put this in context. Why this downsize is raising a lot of red flags in the market. At least a lot of people are talking about it. So back in 2022, Gemini had about 1,100 employees, and by the end of 2025, that number was already cut in half. Now, with this latest round, the company is getting even smaller. This has been a multi-year pullback, so it's not just a one-off decision. Like the Winklevoss twins, how they framing is that this is a deliberate strategy. So there's nothing to be concerned about Gemini. We are fine. Like the financial is fine. So the message is simple from the Winklevoss twins. So they want smaller team, they want faster execution and more automation. They say AI is now doing work that used to require many more people. So Gemini is already using AI tools from AWS, from Databricks, and TradingView. They are also building their own AI systems for engineering, for operations, and for market analysis. So, according to the founders, AI has pushed productivity beyond the old 10x engineer idea. In their view, fewer people can now do dramatically more work. At the same time, as I mentioned in the beginning of the news, they are also exiting the UK, the EU, and Australia. Here's what users need to know, like especially for those who are watching RoxomTV and happen to be using Gemini. So new accounts in those regions are already blocked. And on 5th of March, existing accounts will move into withdrawal only mode. And by 6th of April, all crypto and fiat funds must be withdrawn. Gemini has partnered with another platform to help users move their funds elsewhere, but make no mistakes, Gemini is really exiting these markets. And this move isn't just about cutting costs, like otherwise why these regions specifically, right? It's actually about where companies can operate with clarity. Gemini is choosing to focus on the US and also in Singapore. These are places where rules are clearer, capital is deeper, and scaling is a lot easier. In contrast, in the UK, in Europe, and Australia are still stuck in long-term, like long regulatory uncertainty. And for businesses, uncertainty can be really expensive. Industry voices are already calling this as a red flag, as I mentioned. Like message is simple. Like if rule take too long, companies stop hiring, they will stop investing and eventually will leave. When capital moves, jobs move with it. And once companies exit, they rarely just rush back into regions like UK or EU. This is actually a warning to governments everywhere else in the whole world. If you don't give companies clear rules, they won't wait. They will just exit. They will just leave. So of course, we'll be watching how this development goes here on RoxomTV. Moving on to the next news of today. So we have French police arrest 6 over crypto-linked Misread kidnapping. So because in France right now, Bitcoin and crypto users are being targeted in real life. So not online scams, not phishing emails, but actual kidnappings and ransom demand. And the most important part is this, like you don't need to be famous. You don't need to be rich. If someone thinks you have crypto exposure, you could be a target. So what just happened in France is that the French police have arrested multiple suspects after a Misread and her mother were kidnapped from their home in southeastern France. They were held for about 30 hours and later found injured but still alive. Investigators say the attackers demand a ransom in crypto. Authorities believe this was not a random crime, but part of a wider pattern. So this is actually not a one-off pattern. French officials said this case fits into a growing trend. Organized groups are targeting people believed to have crypto ties. And here's what's important. Many of the victims, they are not public figures. They are not influencers. They are not known to be a crypto millionaire. Sometimes, like it's enough to have attended maybe to have attended a meetup, pay taxes on crypto, or simply be known as the crypto person. And this is happening more right now. Like the reason's quite simple. Like crypto is portable, crypto can move fast, and criminals believe pressure would work. As crypto adoption grows, visibility would grow. And that visibility, of course, it comes with risk, especially when personal security law are strict and slow to protect victims. One of the loudest voice about this news is, of course, Kevin, who was also one of the guests here on RoxomTV and interview him personally. So Kevin, he tweeted this out on X. So he has been warning that France has reached a dangerous point. His message is quite blunt. I'm not going to read that out loud. Even ordinary people with small crypto exposure are now being treated as potential targets. His key point is that this is not a wallet problem. Strong keys, faults, and time locks do not stop kidnappings. In many cases, attackers don't even succeed in taking funds. Fear itself becomes the weapon. So what people can do right now to protect themselves. So let's keep this practical and grounded. First, reduce the public exposure. I wish I had that choice, but maybe I'm too late. And don't post your holdings, don't flex your gains, don't make yourself searchable. Second is that take threats very seriously and very early. So if you see any weird messages, like strange questions, social probing, just do not just ignore them. And that approach you take is to tighten your daily routines. Think about home security, think about travel patterns, think about who knows what about you. And lastly, talk to your family, because criminals don't only target you, they might target relatives. So this is not about panic, but it's about raising awareness for the viewers of RoxomTV. So this, again, goes way beyond just one crime story. If everyday users feel unsafe, adoption slows. And a financial freedom story becomes a personal safety issue. This is where technology, law, and real life collide. All right, so we will take a short break for now. And when we come back, we have a special guest joining us today. He's the CEO and co-founder of Brickken, and his name is Edwin Mata. So do stay with us after the break.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back to RoxomTV, and thanks for sticking with us after the break. So joining us now is our guest for today, so Edwin Mata, the CEO and co-founder of Brickken. Edwin is a blockchain lawyer by training with a background in mergers and acquisitions, who moved from legal tech into Web3 after seeing how blockchain could transform asset ownerships and capital markets. He's best known for his work in RWA, so tokenization, helping institutions and companies bring assets like real estate, equity, and revenue stream on-chain in a compliant way. Brickken has tokenized over $415 million in assets across more than 160 countries, and Edwin is a regular speaker at major events like Consensus and Tokenize, focusing on regulation, institutions, and where tokenization is actually heading to. So, Edwin, it's great to have you today. How are you feeling?
Yeah, pretty good. Thank you very much for having me, and excited to talk about RWA, the current state of the art, and what is happening, right? What's trending in this tokenization field.
It's great to have you for sure. And when I was speaking to you, I realized this is your first time in Hong Kong. How do you feel about the whole Hong Kong crypto scene?
Yeah, so excited. I mean, it's always nice to visit a new country, but when you go for work, there's just a little bit few of hours. So far, food has been great. I'm a foodie, so amazing for that. And the other thing is just you can feel that the city is vibe with Web3 blockchain innovation all over the main city. I'm already stumbled upon people that I know just on random coffees. So excited about what the whole week is going to bring.
Yes, I mean, this week is consensus week in Hong Kong, and you happen to be a speaker at one of the panels, if I
Yes.
got that part correctly. So, since this is your first time joining us here on Roxom TV, why don't we do a little bit of like a quick rundown of your background? Because like you went from M&A, so merger and acquisitions, blockchain law, into founding Brickken. Like, walk me through your journey.
Yeah, of course. So, I mean, in that sense, I was doing mergers and acquisitions, especially restructuring of companies. And in 2018, landed into blockchain for work. I had to study because of a file that we had, and it was quite new and uncertain at the time. And I was amazed how value was transferred across something that it was a public ledger, right? So Ethereum. I was like trying to understand what it meant. So 2 years studying, and while I was working as a lawyer, then 2020 decided that I wanted to do something around it, which was the early years of tokenization, kind of like digitizing this value that it's real, that it's in the real world, let's say, and then you bring it into the blockchain because of all the characteristics, such as less friction, very few fees, just to have to pay on the gas, no intermediaries, accessible 24/7. So for me, it was kind of like this new way of understanding how value can be created, transacted. And 6 years later, here we are talking about Brickken and yeah, founding, which is a completely different job from being a lawyer. Nobody can tell you what it means to found a company until you try it.
I mean, that's the fun of life. You never know what's your next journey going to be. So, going back to Brickken, so one thing I find really interesting. So, it's still a startup at the end of the day. So, 6 years is not a very long time. So, one thing I find very impressive is that Brickken has tokenized more than $115 million worth of asset across more than 160 countries. So, I wonder, like, walk us through the journey. How did you achieve that very impressive number in just 6 years? And if there's any like one stand-up project that proves to everyone in this world, maybe a non-crypto person, maybe to your relatives, like this idea actually work.
Yes, of course. So I mean, the solution was that we wanted to bring it to the mass market, right? So because blockchain, especially during the early years, was very niche, kind of like the approach was very much for Web3 crypto. Everything revolves around that, right? So DeFi is specifically for Web3, exchanges for Web3. And it was like, so we need to bring this technology, and through tokenization, we wanted to do it. So the first step was worrying about user experience, kind of like not worrying about the technology because our clients don't care about the technology. They just want something that works and they understand and they feel confident. So how we amass these clients, now we have over 100, I believe 120 in live clients. It's just because we provided with the solution that they don't have to worry about the technology. I'm not the blockchain product. I'm a capital formation product. And that's what I bring, the same language for them to understand that what we build for them is to cover a specific need. So I'm doing whatever Web2 builder will do, just solve a problem. And that's how we have amassed this growth and understanding. So, I mean, the only thing I can give to any future builder or anything is just make things simple. Don't go for whatever you think works. Talk to the client, receive the feedback, reiterate, renovate. If you make a mistake, pivot. And this is what we have done through 6 years. Of course, our last 2 years may be the most successful. But if you ask me how were my first 2 years, yeah, they were very bad. So, I mean, that's how we learn. You learn by reiteration and understanding how to evolve through the feedback of your clients. That's how we have grown.
That's really impressive. And you go into like the top 30 sifted startups. So that again once proved the rapid growth of the company. So I want to get down into what services you actually offer in Brickken. So from my understanding, it's a platform for institutions to tokenize absolutely every single thing. If that works,
Yes.
if got that part correctly.
Yeah, of course. I mean, just think of us as an application. We're a software that allows companies to decide what they want to tokenize, in what manner. So they want to do real estate, we give them the rails. If they want to do gold or they want to do equity. So the most important thing is we are a huge tulip boss. In that sense, we're like a super app that allows a lot of different paths and the company to have full control, and we make it simple and accessible. So when people think about tokenization, it is true. A lot of people don't know how that works. It's like, okay, so you have tokenized something, but how does it work? Kind of like, what is the journey? So that's something that we have really worked with to make it into very clear steps for them to say like, okay, log in, register, pay, and then you have access to all you want. And in every single sense, we guide you through the application for you to be able to understand what comes next, where are you at. So we're much in the guiding process, because in reality, tokenization is still a new concept, right? So in that sense, we have always worried about kind of like helping and coming with the client during their whole journey for them to be successful.
Yes, that is a really interesting point. So, for our viewers out there who's not very familiar with the term RWA or tokenization, like basically we have an assets in real world. Like, for your understanding, from your own perspective, like what is the point of turning one asset to tokenize that? I mean, it already exists in the real world. Like, why the hustle to put that on a blockchain?
Yeah, and super fair question. I mean, in the end, it's accessibility. When you are trying to capital form, you are constrained by geography, by banking, by the fiat, the legal tender money you're using. So there's a couple of barriers, right? So we think it's like capital moves worldwide, yes, at a large scale on certain movements, but in lower midterm, it's very hard to move just because you have different payments during transactions. So moving money from Hong Kong to, let's say, Colombia, for example, it's costly because you have bank fees, exchange fees of different currencies. So there's a lot of barriers out there. So if you unify everything under one single solution that you can transfer money across worldwide 24/7, frictionless, fee-less, full control, how do you move the money, who can invest, from where. So you have a lot of ownership in your formation of capital. Then you have more opportunities. So it's all about accessibility, which is kind of like the upgrade of tokenization, and even why big funds are doing it. Because the constraints that have been done by banking or monetary policies across these past years suddenly get eroded by technology, by blockchain technology.
Yeah, so and you absolutely like you would tokenize any assets that would include like real estate or basically any hard assets that we see. So I'm wondering like how does that process work? Like for example, if you're trying to tokenize a real estate like a house in Hong Kong, like for if I have that asset and if I want to tokenize, how would that process work and how do I value that real estate because like it says some professional would come to my house and okay tell me how much my house is worth.
Yeah, so I mean, in the end, technology will not supersede for you to do the things you do without technology. So you will need to get an appraisal, and that will value your term, and then the market will decide if it's accepted or not. The most important thing about tokenization is that just by digitizing, you don't get free capital. So you still have to understand that whatever you offer, there has to be a market that wants to buy that, and because there's a potential APY, so you give them interest if it's a loan, or because if you're tokenizing the real estate, maybe it gets valuation up, so it's a flip. So the most important is understanding that what are you tokenizing and for whom. Once you do that, what is the trust? Are you gonna give them trust by appraising it, or you just gonna value by default and say like, I think it's $1 million. So that's kind of like same questions that happen in non-technology. You have to answer in technology, and then basically through our app, we guide you through that process, saying, okay, you want to digitize this for this, and you want to provide them with these incentives, and you're gonna land, and then we offer you an investment portal where they can log in, KYC, you decide the whole flow, who can invest and whatnot. But the most important thing, which is the fact that what you're asking is, how do I get new investors here? And the answer is, it's not a technology answer. It's always a company or personal answer. It's, I have this real estate that I need money that I want money or liquidity. So I am offering to potential investors these returns. That is the product. Then technology like Brickken or tokenization, that is helping you to be more successful, but it's not making you successful by default. Your product it should be the one that makes you successful.
Got it. So I wonder, like throughout almost 6 years of doing tokenization for different companies, different institutions, are there really successful case like after tokenizing, especially utilizing the platform of Brickken and the institutions for a certain asset just happen to grow massively? Of course, like as you mentioned, like the asset itself, the marketing itself, it has to be great. Like the market would want that asset in order to be valuable. But like after doing, is there a case that after doing a certain steps for tokenization, and then all of a sudden people could access to this asset, to this real estate that they know about? Is there any successful case you could share?
Yeah, of course. I mean, I'm going to step away from real estate because obviously real estate seems to be the only asset tokenized because during years it made the most sense. But now we're tokenizing even gold or creating stable coins with a collateral commodities, which is a super interesting now. But on our sense, we have tokenized IP, so intellectual property of companies, which is something that there's a niche. We have done a lot of commodities nowadays. We're about to maybe enter the shipping industry out of here of Southeast Asia. That's why we came, because there's a lot of invoicing and variables around it that maybe there's liquidity needs, but also potential gains. So in that sense, kind of like, is there one specific asset that is more kind of like successful? The answer is no. The product, the yielding, the opportunity, that is what the successful case. So on our end, we have done bonds, shoot out from asset managers. We're now creating funds. So in that sense, kind of like it's hard for me to specify like one success story because I don't want your community or viewers to say like, oh, that's the only thing that works. No, every single product that it's investable because it provides an opportunity of gains, that can be tokenized. And I want your community to understand that the yield, the earnings is the product. If you have something that can be of interest, then it can become a tokenizable product.
Yeah, so going back to you, you mentioned like even IP right to be tokenized. Like, could you dive deeper onto that? Like, what do you mean tokenized IP right? Isn't that like what NFT is for?
Oh, yeah. I mean, nice. NFT, it's a model of technology. So it was very much trending back in 21 and 22 because NFT used to be used for a lot of IP. But now, kind of like you can tokenize via NFT because in reality, it's just an ERC21. It's just standard. It's not the product. So when you tokenize IP, you can tokenize IP rights. So if somebody looks crazy, creates a patent, for example, and you want to get a loan for the exploitation of the patent, you can provide the earnings of the exploitation of the patent to your investors. Or if you want to do IP music, so you want to get funded for you to create, I don't know, a Spotify album, then you can, the revenue on that can get distributed, right? So there's a lot of IP rights that you can do. And now they're doing some. We tokenize a Broadway theater, which is super random, but that's how it is. Like there was a Broadway show who wanted to get funds to be there, and the people who invested, they got the interest back from the exploitation of the Broadway show. So that was an IP right tokenization, and like that we can go through many examples. So do you use NFTs? You could, in fact, people may be able to use that. But on our end, we like to use our own standard that we created, ERC 7943, because we see it more valuable for how we're doing, which is kind of like not one NFT that is unfungible, but just a multitude of opportunities to get invested via fungible tokens.
Yeah, so it's a good thing that you brought up the standard that you guys are using. So it seems like you focus on Ethereum, or like when an institutions come to you about like the service of tokenization, like would you advise certain chain like Ethereum, BSC, Polygon, or Base, or it's just like maybe where the most liquidity is, that's being
The,
Ethereum, just focus on Ethereum.
I think you just answered your your question because it's a liquidity factor. Uh, I mean, in the end, we do work with various chains. Some of them are partners where we are an official tokenization provider. So we have a great relationship and we push it because the funny thing is our clients, I'm going to say exaggeration, but probably true, 99% don't ask for a chain because they don't understand. right? For them, it's kind of like just a name. For them, it's indifferent Ethereum than Polygon. So sometimes we have to take the responsibility of sending in a path because we believe that they can be successful because of the market that is being created there or whatnot. But in the end, the only answer that we have to really, or the only question is, where is the liquidity today? And we see obviously the Ethereum always amassing a bunch of liquidity. BNB here in Southeast Asia for certain products makes a lot of sense. Base, USA, so also in the geographic type of things where you launch an asset may matter. But that decision is like 10% because the blockchain is not what is going to make successful the project. In the end, the company or the project has to go and look for liquidity and the marketing and whatnot. But it is important that at least 10% of help they can get it. So that's why we like to work with main chains. We do help other types of chains where they're building now the liquidity and what to have it as an alternative. But yeah, I mean, I think on our end, we're even integrating CCIP, cross-chain interoperability, because we want to hide or abstract the blockchain, because for us, this is a friction point of view, because the Web2 user really just wants one click for something to occur without having all of this technological understanding to have to deal with.
And I know you guys, so Brickken is specifically massive in Spain and Malta, and there is a qualified trust service provider in Spain and Malta. Like for our viewers out there who is not too familiar with the EU market, like could you explain like why does this matter to our viewers?
Yeah, of course. So I mean, we were raised, but then we incorporated in Spain. We're there because the ideas are there because of our co-founders. I was living there in Barcelona, but we're a software, so we are we provide our service to different countries, and we have clients worldwide. Just because it don't need us to be in a specific place. In the end, software just travels, so they can just acquire the software, do their tokenization on their own, and basically that's what we do. It is true that now we're getting regulated, specifically in Spain under MiCA, to become a custody and a broker for us to deal with another side of things. Same things in the UAE. We're analyzing Singapore, but those is because we want to set up a subsidiary to have access to more local markets. In the end, from a software, you can sell worldwide, but it is true that certain business you need to be hand to hand in the specific country, right? I mean, sometimes culture or sometimes proximity is what lands the deal. So, but regardless of, and I would say luckily for us, I mean, from Spain, we have been able to scale worldwide. And it's funny now, I think we don't even sell in Spain anymore. Not a specific reason, it's just that other countries are more keen in tokenization. So for us as a company, you always have to go what is called for the lowest hanging fruit. Where is your most valuable client with the least resistance? And we've seen that a lot in United States now with the Call Clarity Act and securities and how it's been done. And Southeast Asia, like today I got packed in the meetings with in the morning, and one differentiator is here about not complaining about legality. I don't. Oh, now that we see it, in all my meetings this morning, not once have they asked me about legality, and that's super weird. In Europe, the first conversation starts with, "So where is the legal? How do I do it?" And I'm saying they don't care about legality here. They know that it's gonna happen and it's already available. They want to see if this it's actually gonna speed their business or be positive for them. So yeah, congrats to that form of thinking, because that's how we evolve.
Yeah, I mean, that's how we do business in Hong Kong. And you raise a really interesting aspect, especially when it comes to the EU market, because I personally, I talk to a lot of projects from EU who's based in EU, but I'm seeing a pattern that like EU projects are trying to escape from the regulators because it's almost like stifling innovation where they're moving to other places, even to US or even to Asia, like Singapore, like Hong Kong. So, talking to you since you come from the most local Spanish market, like could you walk us through how is the EU market like? What is the crypto scene basically in EU?
Yeah, so I mean, Unfortunately, I think the EU over-regulated certain things for the protection, but over-regulating kills innovation. So yeah, you protect the citizens, but then there's no technology to apply, so they're safe by default because you overprotected. Now it's funny because now with the whole MiCA regulation, you will think that it set the path for crypto companies to evolve, and the only ones applying are companies with big pockets because legal is expensive, so they have to hire law firms multiple years for them to be successful. So kind of like it became a whole barrier. Like if you don't have deep pockets, I will not go the crypto way right now in Europe just because it's gotten very expensive. And if the new startups, which have the innovation, the thrive, the hunger, you stop them, you're really just killing innovation. And that is what's happening in the EU. It's very sad. I mean, I can say easily that, and I'm going to move a forecast, kind of like in 2021, 2020, when we started, let's say there was 1,000 blockchain companies in Spain, especially with the whole NFT mania. Everybody was trying to innovate and whatnot. I would say now in Spain there's only like 10 companies, and I'm not even exaggerating. This is a massacre of innovation, and not only that, no people are moving now or trying to go elsewhere just because it became too expensive to say like, hey, I'm compliant. And people in the government, they forget like, when you start in, you don't start with a million. Okay, so I would say like maybe some do, but in general, when you start a company and you're founding, you don't have 1 million in your pocket where you're going to spend 500,000 on law firms to get some regulatory approval. So it's unfortunate that is happening, and yeah, I don't think there's going to be a suitable solution. Everybody's talking about it, kind of like innovation is not thriving because of regulation. But then again, let's see what happens, because Europe used to be a powerhouse and everybody wanted to build it because of the Trust Foundation, but now it became a complete obstacle.
Yeah, that's definitely sound really sad, and especially coming from a local European here. I wonder, speaking from your personal journey, like you've been through that. Lucky for you because you started 6 years ago before the EU regulation got so tight. But what about like locally in Spain? Like if you meet a crypto founder who got this amazing idea, who's trying to pitch the world, like what is the advice you could offer to the local European startup, like startup founder?
Yeah. So I would say don't give up, but also, unfortunately, right now, I would recommend to not start a blockchain company in Europe, because I seen it in the last year, 2025. I saw new companies starting, but they wanted to enter kind of like maybe the tokenization, but let's say regulator crypto payments, and they disappear. It's because of it's too costly to be with that level of compliance, and also a lot of the things that you might need, that you need a license for, the licenses in Europe it can take like a year. So imagine you create something for, you need a license for which you apply, you're paying lawyers, and for it to last like a year. So it's kind of like I'm building something that in a year it may work or not. So it's very costly. So I will, yeah, being completely transparent right now, I would say like, come to Hong Kong, do business over here.
Yeah, speaking of Hong Kong, like seems it's not only Brickken, but I notice a lot of European projects are pivoting away from the local E market. Like today, we have the news that Gemini is giving up the EU market, giving up the UK market, and also Australian market, and just trying to focus on Singapore and US because the liquidity is there, the regulation is not as tight. As you mentioned, like you are trying to do the same, like pivot away from the local Spanish market. And since we are in Hong Kong, like why don't we talk a little bit about Asia? What's your take on Asia? So is that like the adoption going to continue to grow?
Yeah.
Is there more opportunities for maybe Spanish crypto founders trying to do good in the crypto scene? Maybe they just like move to Asia or something.
Yeah, so I think I'm gonna picture a little bit how I see the world from a tokenization point of view. I think EU gives trust. It is true that us being in Spain with how we're doing, And in Europe, they know we comply with the highest standards because it's true. If not, we would not be here. So it does provide trust at the very costly. Then you have the UAE, which right now I think it's very much marketing, right? So everybody's saying, oh, all the UAE is getting tokenized. I think they're very early, and I think it's more kind of like a marketing thing because I'm not really seeing any real tokenization happening. It's interesting to be there because of the position in MENA to be accessible to Asia. And I think from that kind of like the real tokenization happening is Asia and United States. United States because it's the biggest capital market. So a lot of that is already kind of like finance people with a lot of know-how during years that this is kind of like the upgrade and we see all the funds coming in. And in Southeast Asia, we have all these trading hubs or finance hubs, which is already kind of like also entering full-on tokenization. So I think during the next 2 to 3 years, let's say, I'm going to see a lot of real tokenization happening in Southeast Asia and United States. And the rest is just going to try to follow up with whatever happens. And the UAE, I think it's going to do a big boom on tokenization in around 4 to 5 years after the marketing happens. Because this is what happens when there's a big boom of something, the cost to do something is very high. So UAE to tokenize right now doesn't make sense from a monetary point of view. While here, it's more about kind of like full speed, which is something that now we're seeing in the United States. So that's kind of like I see tokenization.
Yeah, so locally here in Hong Kong, we like to move really fast, and maybe even regulation we move really fast as well. And that's how we got the licensing. We even front run the US on the whole Ethereum spot ETF as well. So speaking of like Hong Kong is a really special region because we are like a free areas to trade whatever we want, whatever assets we want. But at the same time, we're also part of China. Well, China is still banning crypto, especially for crypto mining activities. Like, do you see if there is any opportunity or real friction, especially between mainland China and Hong Kong from a business perspective?
Yeah, so I think last week we saw the China banning, a big announcement, or it was a couple days ago. And this is something that I'm actually discussing with local people, how they see the impact, because I'm not an expert, let's say, in a specific region. Like I've been following Hong Kong for a long time just because of the financial hub, because it's an important one. And how it is affecting China, I see it as an opportunity while mainland is prohibiting for people to create something out of his. And the important thing is when you prohibit something, let's say from a general perspective, liquidity always finds its way. You cannot block liquidity, right? So I already see some companies on meetings that we had that they're trying to create an SPV somewhere else for them to be able to tokenize the assets that they want outside of not outside of regulation because that's not what they're doing. They're trying to get the liquidity somewhere else for them to bring it in mainland because this is a liquidity game. Tokenization and many things is just where the liquidity is coming from and to where. So I think China banning it's a mistake on the country because they're missing on the real opportunity of just putting capital markets on rails and everything that becomes frictionless. And I think important regions around the area from the prohibit from mainland, they're going to see this as a huge opportunity because let's not forget about all the mass locked value that China has. And that's just creating an opportunity for whoever has the speed, such as here or Singapore or South Korea, and to them to amass kind of like that inflow of liquidity.
Yes, amazing. And as for our viewers out there, if they want to know more about Brickken, where's the basically the maybe latest development, latest updates, where's the best way to search for that?
Yes, of course. So yeah, thank you very much for that. Obviously, follow us on Twitter at Brickken.com. No, Twitter is at Brickken, and on our website Brickken.com. And yeah, follow us on our socials if you're interested in tokenization. But also, we do a lot of education, research reports, because we've been doing this for a long time. So we like to distribute knowledge. In the end, this is how tokenization starts being a trend and becomes a standard, and that's something we like to push. So please do follow us, and if you're interested in finding more, there's a lot of ways to to chat with us. And hopefully from one of your listeners, somebody's interested in tokenization and I'm in Hong Kong, happy to meet. Let's get the ball rolling and let's tokenize Hong Kong. Why not?
Yes, I mean, that's the speed of Hong Kong. I'm sure you will come across a lot of interesting people, especially during the week of consensus.
Absolutely.
So this has been great. Thank you, Edwin, for doing this with me. We do have more show lined up here on RoxomTV. And as for always, my live show is from Monday to Friday, starting at 3 a.m. So thank you guys for watching and see you guys tomorrow.